standing by here with the small and mid-cap U.S. equity strategist from Credit Suisse, Lori Calvasina.
Calvasina.
It's so easy when I'm not reading it off of a piece of paper. In any case, you're the small and mid-cap U.S. equity strategist. We've seen small caps underperform. The Russell 2000 is down, what, 20% year to date?
28% from its April highs, actually.
From its April highs, and we're seeing, what, the S&P losing about 13%. We're looking at, what, year-to-date drops here. Why do you think small caps have underperformed here? Just because everyone's getting more defensive?
Well, look, we think this was a long time coming. Valuations for small caps versus large caps were at 30-year highs back in April. You've also had corporate profits growth slowing this year. That's usually bad for small caps. The VIX has been going up. That's all a recipe for small caps to underperform.
And at the beginning of the year, there were a lot of people out there saying small caps are definitely going to win this year. It's always kind of a battle that we love to follow. Is that because the outlook for economic growth was much stronger?
I think it was, and there was also such strong momentum behind the small cap trade in 09 and 2010, and even the first few months of this year. People really didn't want to get off too early. And, you know, unfortunately, I think these pressures just built and eventually came home to roost once global growth started to slow.
Hey, Lori, you know what's really kind of cool? I think you sent us a chart, and it kind of shows historically large caps and small caps and kind of what happens after a recession or a crisis. And what this chart is showing everybody is that after a recession or crisis, the small caps tend to outperform large caps. And we've got those bands in gray. If you take a look, watch that chart, look at the bands of gray. That's when you were going through either a crisis or a recession that we have going back to 1978. If you look right after those bands of gray, you can see the small cap, that's aligned to the small cap outperformance of the large cap. So, Lori, what are you saying at this point? I mean, we're debating whether or not we're going into a recession at this point. Are you saying that potentially we're getting ready for small caps to outperform here?
Well, look, I think there's one more leg down in the market, and I think that's going to be pretty bad for the small cap space. Usually recessionary drops are about 38%. We've only lost 28% at our worst point so far. But that chart really does have me saying that you have to keep your eyes open for the longer term opportunity here. Because historically, when you come out of recessions, when you come out of crises, that's the best time to be invested in small caps. So are we there? Probably not yet.
Because of historically, you get more of a serious rebound in economic growth, right? I mean, maybe it's not that coming out of a recession that's good, but going into growth, if we bounce along here at 1 or 2% growth, even for the next 2 years, that can't be good for small caps, right?
Well, I think it depends where the valuations go. If we've had a pretty significant drop here so far, and you don't always necessarily zoom immediately coming off the bottom, but usually the small cap stuff gets beaten down the hardest. The thing you have to remember about small caps is they tend to have better long-term earnings growth than large caps over time. So when we come out of the recession, even if growth is a little bit sluggish, people are really going to be trying to find it any place they can. And then if we've got the recession behind us, if we're starting to heal, small caps are going to look pretty good.
You do say also that if you have a longer investment period, so 5 to 10 years, then you think there are reasons that small caps are better performers than large caps over time. But I guess it's a higher risk proposition, right? Because there's more of a chance that the company blows up.
Exactly. And so what I think you want to do in this environment is not maybe buy a specific small cap stock or two. I think now is the time to invest with a small cap portfolio manager. Because one of the things we see is that they're pretty good at avoiding those blow-ups. They give you the exposure to the small cap space over time. And actually in times of turbulence where the Russell 2000 lags the S&P 500, you do tend to see actively managed small cap funds, mutual funds, beat the Russell 2000. So you can kind of be a little bit safer in the short term and leverage to the exposure over the long term.
Laura, I know you can't talk specific stock names, but talk to us about sectors where you think investors should have some exposure in the small and potentially mid-cap universe right now.
Well, I think if you want to keep a little defense on the table, you stay with healthcare. Valuations still look great in small cap healthcare versus the Russell. As far as recovery plays, I think industrials and technology both have very compelling valuations right now. Technology also tends to consistently outperform coming out of a recession. And then my third favorite recovery play would probably be consumer discretionary stocks. There are pockets like retailers that look pretty cheap versus the Russell, and like technology, that's usually where we see leadership in small cap coming out of recessions. One place I wouldn't touch right now, though, is energy, because we still think there's a lot of valuation problems there.
So energy is, you stay away from that.
Absolutely.
What if you see a turnaround here? I mean, if you did see signs, the other day I misheard Tom Keene, and I thought he said we had 4% GDP growth as I was driving into work. I almost had a heart attack. If you had some massive positive economic surprise like that and things started ratcheting up, would you just switch all into small caps here?
In terms of going all in, I mean, I think you do want to keep a balanced portfolio that's well diversified between the asset classes over time. But, if we do get a sense that all this recession talk really, isn't going to amount to much, you'll probably see small caps start to recover a little bit more quickly. But I do think you've got to watch the economic signs.
Got it. All right, Lori, thanks so much for joining us. Lori Calvasina from Credit Suisse. Carol, back.